Today, I want to learn about options trading from my good friend Austin here. What's up, Austin?
What's up, man?
We,
Thank you for letting me be here.
yeah, it's it's not even a show. I, uh, you and I have been real estate investing together for a while, and I have a very good partner, VJ, my operating partner on my multifamily properties, and he's like, man, I've been doing this options trading. I got a process and a program going, and I make like 3% per month, and that's been going pretty consistently. And now I think I'm going to add another. He's got some money, so he's going to add a big chunk, and he's like, it's been pretty reliable, pretty consistent. And then I was like, okay, that sounds good. And actually, he told me now he wrote a bot that just runs it for him. And then I talked to you, and you're like, yeah, I'm doing like the same thing. And I was like, man, well, I don't want to be missing out. So let me see what I can do here. So
Now,
you're
I
going to
will
teach me how to.
say, full disclosure, I'm not actually running an algorithm, which is very common, though. It's not something that is um, out of the realm of normal in the world of options trading or just algorithmic trading in general. It's a very legitimate and lucrative space. But for me, I just do it very manually. And yeah, I'll show you my whole process, my breakdown, how I think through what the trades are going to look like. And yeah, I'll show you everything.
All right, and then this is what's it called? What are we going to do in here? We're going to go into. Give me an overview of what we're about to do.
Yeah, so cash secured puts is what I do. Now, just to give you guys some background on who I am, I'm a funded prop trader by Active Trade. So I don't do this sitting behind my screen. This is like my passive way of taking the skills that I've learned with regular trading, active day trading, and just being able to, put some cash and diversify the way I trade. It's not like you never want to have all your eggs in one basket. And this is a way that honestly, it's very conservative. And you can put it in here, have just another little nest egg of a way to invest into the markets, right? And it's kind of actually cool because obviously you do a lot of real estate. It's kind of a way of buying and holding stocks, but also getting some rent to own the stocks, just like how if you own property, right? You're buying and holding the property in hopes of the appreciation of the price, but you're also getting some cash flow, well, with some of the deals. And this is the same process. So just in the stock and, assets world, in the world of finance.
So cash secured, so no negative leverage, not worried about big losses, and we get cash flow, which I love my cash flow. Okay, and we're gonna do this through Robinhood. You can do this with a free Robinhood account. Is that correct?
Yes, yeah, you can do it through Robinhood. Robinhood is honestly, despite what happened a few years ago, Robinhood, in my opinion, is one of the especially more beginner-friendly options trading platforms. But you can trade any type. You can do options, regular buy and hold stocks, that type of stuff, even crypto. But the thing that I love about options is that they actually walk you through the process, and we're going to see that in a little bit with Alex. You're going to see that it's so simple. They don't. A lot of the times when you open a brokerage account, they have this giant book map, right? And that's what it's called, a map. And it just looks so overwhelming. If anybody Googles options, right, they're going to see this and they're going to see all these prices everywhere and go crazy. But options, it literally says, do you think the market's going to go up or do you think the market's going to go down? And here's your options. And it's a really cool process. But before we do this, Alex, I would like to show you, I guess, my thought, because I don't want to show people just how to do the option. I would like to give people the value of analyzing an asset in very simple form. I'm not going to be using no hard terminology or anything like
Let's
that.
get right to
Or we can do
business.
that after.
Let's go.
Okay.
Yeah,
All
let's
right,
do it
cool.
afterwards. Yeah.
Okay, cool.
Okay, so I have I sent over. I'm going to put a small amount of money in this. So I think I know you said there's some minimums. I put over, it's like $1,000, something like that. So I'm going to share my screen once we get into it here a second. But tell me how to get started if I'm on the Robinhood platform.
Okay, so let me pull it up myself so I can do it exactly with you. So the first thing you're going to do, are you going to share your screen while you do this, or you just want me to start talking now?
I will, but I'm just right now. I'm gonna just tell me the first step, and that way I don't have to disclose my entire life to everybody.
Okay. Yeah, first step is you just pull up your Robinhood. You're on your dashboard where you can see, your equity line for your portfolio. You can see it's just the general. If you're on your phone, it's on the bottom left little tab. If you're on a computer, it just looks like a little graph where you can see how much money you have. So what you're going to do is we're going to buy an option, or we're going to sell a cash secured put, but we're going to do an option. Now, I'm not giving Alex financial advice. I am not a financial advisor. I am not giving him in any way, shape, or form licensed trading advice. I am not a licensed trader. I am a prop
We are
trader and
two
I trade for
idiots.
myself.
You're
We're two
an idiot,
idiots.
and I'm an idiot. And if you follow idiots' advice, then you are likely to lose money. Okay.
So, Alex, I'm going to tell you what I would do, and then you can do whatever you want to do. So, what I would do is I noticed that SoFi, I think everyone here knows SoFi as the business. I view SoFi as an undervalued asset right now, and I want to collect premium for giving people the option to buy my contract if price goes below a certain price. And I believe in this coming week, based on how I'm looking at the markets. Now, could I be wrong? Absolutely. Trading is not about being right, it's about risk management. I tell people that all the time. So I believe SoFi will appreciate in value going into next week, until at least from now until Friday. So I'm going to do what's called a week-long expiration date on a cash secured put. So what we're going to do, Alex, is we're going to click that little browse button, the little magnifying button. You're going to just search SoFi's ticker symbol, which is SOFI. Just tell me when you're there.
Okay, I'm there. And I'm going to share my screen now.
Okay. Yeah, I guess this will make a lot more sense.
Yep. I don't know why it's not coming up. Can you see it?
I see loading. I see like some dots.
Yeah.
Oh, now it's gone.
Yep. There we go.
Dope. All right,
okay,
cool.
There's SoFi.
So it is going to be a little different for me because I don't do this on the computer. Let me maximize your screen so I can see. Okay, cool. So you're going to click. So if you guys are on the mobile version, you would click on SoFi, the actual stock. So you just click on SoFi. Then you would click trade. Now, Alex is on the computer version. Is there any way to make that just a little bigger, Alex? I can't. It still looks a little.
Oh, on your
small
side,
on
yeah,
my
you'll click the top right.
No, I did. It's still just. It's like a square. It's not.
Buy a bigger monitor.
Oh, there we go. Okay, I see order type. So then you'll click that little drop down box where it says buy order because we want to do an option. Okay, so that's not there. It's because again, I don't do this on the computer. So
Yep, that's okay.
hold on. Let me see if I can put you on my other monitor. Will that help at all? Yeah, it doesn't make your screen big. It just makes it makes the screen bigger, but your actual monitor that you're sharing stays the same size. I can't read what that middle button says.
Which one? Which middle button? Yeah, I don't see options in here.
Oh, have you activated? You may have to activate your account. So go to profile.
I thought I did. You can now use level 2 options trading.
Okay, yes. So you should have access. Oh yeah, you're gonna have to edit this. So go
No, it's fine. I don't actually care.
Okay. Sorry,
This is what
dude.
people want to know.
I didn't know you were going to do this on the computer. I should have prepared.
Yeah, you should have. Wow.
I know this is just totally my fault. SoFi, let's try this again. Oh, what's that right there? Right there. Trade SoFi options, right? Yeah.
Oh, see? Look, this is for beginners. If you're not a beginner, see, this is
Sorry.
Actually, let me give you some really good insight though. Let me give you a really good life lesson, right? This is a really good moment where something that you know so intimately that you think, hey, I'm going to teach you the basics. But the reality is the basics are sometimes so basic, right? That you're like, I forgot to teach somebody that. So just good life advice. When you're teaching somebody new, you got to really, really appreciate how little they know. So I'm so new at this. I don't even know where the buttons are.
Yep, absolutely. Okay. So so this is called your order book. Okay, so what you guys are looking at right now, so that way you guys understand the context, we're not just going to blindly buy and sell something. So you have a buy, a call option. So that you have 4 different tabs there. You see, you have buy, call, and then call put. So you as a trader, you have the option to either buy a call option, sell a call option, buy a put option, or sell a put option. Okay, so what we're going to do, because we are doing cash secured puts, we're going to click that sell button just like Alex did. Then you're going to click that put button. And now this is where a little bit of analysis comes in for whatever asset you're looking at, right? a lot of people analyze stocks in so many different ways, guys. There's so many ways of trading out here. I'm not going to tell you that the way I'm doing it is the way, because it's not. You can make money just like in real estate with so many different ways. How I use market structure on actual charts, so showing the fluctuation of price. I use market structure in that way to tell me, are we bullish? Are we bearish? Is the price going to go up with a high probability, or is it going to go down? So what I'm viewing is, I see here on my chart that SoFi, I want my strike price to be at least $7.50. So what we're going to do, and I'll tell you why I came up with that. So what we're going to do is we're going to go down here, we're going to look for strike prices, and we're going to find $7.50. Because what I believe, based on what I'm looking at on the chart, and what I believe based on my analysis, is that if the price of SoFi gets to $7.50, then I'm okay owning that stock. So this is where a lot of people mess up in oh, that was my alert, sorry. This is where a lot of people mess up in trading, is they think that they get so glamorized by the premiums, which is the cash flow that you earn from doing cash secured puts. They want to find the best premium, or they just want to go to find whatever asset gives them the juiciest cash flow. But there comes with risk, right? It's all about risk to reward. And if you go and always try to find an asset with the most premium, there's probably a reason for that. Just like how in dividend investing, right? A lot of stocks that have high dividend yields, do they maintain that dividend yield, Alex, for a long period of time? Usually not, right? Usually the industry standard's like 3 to 4%. If you see something with like a 10 or 11, they're probably not maintaining that for quite some time. So in options trading,
we saw this in the blockchain, the fancy cryptocurrencies, and they're like, oh,
exactly.
It's a cash payout of 5% per year, and I'm like, you guys didn't exist last year. This can't be sustainable, and sure enough, it wasn't.
Exactly. So in this case here, what people will do in options trading that really just is such poor risk management is they don't even look at the stock, Alex. They're just sitting here like, which one gives the best premium? And if you're not okay with owning this stock, which means if you get assigned, then you're going to be like, dude, I really hope this company actually goes good. I think we can all agree that SoFi is going to be here next week and actually effective. What were you going to say?
I don't know anything about this company, so I don't know that. But that's another.
Yeah.
It's an important part that you're saying, though. It's like you have to understand, you have to know these companies a little bit.
Absolutely.
But it also is important to recognize the downside risk, where it's like the downside risk here is that you buy this stock at this price.
The downside risk is that, so here's a very big differentiator between what we're doing and what a lot of people confuse options trading with, which is it's called ODTE, okay, meaning zero date to expiry. So we have an expiration date, meaning we're going to tell Robinhood, if we get assigned at, like, if price gets to my strike price by this date, I'm okay owning these shares. This is where a lot of people get burned, is they do day trading of options where they do zero expiry date, and they're just buying and selling the same day, hoping that price goes up or down, doing either a call or a put. We're doing this passively, taking like 5 minutes out of my time when I actually understand all this, and I'm just getting cash flow. So back to what we're going to do, Alex. I'm sorry, I just like to give a lot of context. So with that $7,
you got to give it in drips though, because we got to keep the thing moving.
Yeah, for sure. So we got a $7.50. Absolutely. We have $7.50 strike price. So now we're going to click that little plus button, and how much ever cash Alex has is going to be the collateral for at least one contract. Now, one contract is 100 shares of any asset. So you have to have at least enough money to cover 100 shares of whatever asset. So in this case, if you click one, Alex, one contract, let me make you a little bigger here. What does that say in terms of how I can't read your text here.
97 cents.
No, it should. Credit. There should say like margin required somewhere. I can't see the text.
It says I don't see margin required. Estimated minimum credit.
Oh, there it is. 97. I'm sorry. It says max loss.
Max profit. Right. Max loss $749.
Okay, so again, max loss is not you're losing the money. All this means is that's coming out of your cash, and that's going into $780 worth of SoFi, which is 100 shares. So in this case, what the cool thing with this is you're going to earn $1. Is that what that says? You're getting expected
max profit $1.
Exactly. So, and SoFi is a very conservative one, and I'm a very conservative trader. Obviously, there's other juicy ones, but this is $1. Now, if you want to go, now this is where I'm going to ask Alex, do you want to go conservative or do you want to go a little bit more aggressive?
I want to go conservative.
Okay, you want to go conservative.
I'll tell you why. I'll tell you why.
Uh-huh.
I don't know anything about this. I do not know this company.
Yep.
People, the game is long. The game of life is long. The game of investing is long. Taleb is great on this. He's like, you don't find out what your average return is until you die. Then you find out what your average return is. Yeah, because you could have an average return of, 50%, and then tomorrow something happens and find out you were wrong the whole way, and your return is now negative for the whole time. So I'm going to play conservative because guess what? I can come back next week when I get more comfortable and more confident and more understanding, and I can be more aggressive.
Exactly.
So,
and
I will say,
this is going to be just a very boring one.
That's okay, but let me be clear here. So I'm going to put in $749.
Yep.
And I'm likely to make $1.
And appreciation of the option, so we haven't gone over that either. Okay. But yes, you are guaranteed at least $1 right now.
Guaranteed, really?
Yep, you are going to get $1. Like, it's going to insert into your Robinhood account as soon as you do this contract, and you're going to make right on your money right now, instantly. You're going to make, I just did the math, you're going to make 0.12% on $780 instantly.
Okay, I want to dig into that. That's good to know. Mm-hmm. People think, $1, that's nothing. I'm like, yeah, it's 1%.
You got to do the percentages. You got to do the
1%.
Keep in mind, people do cash secured puts with hundreds of thousands of dollars as a diversification method.
Yeah, if you had $100,000, you'd make $1,000 right now.
You can do the math right here. You can do 10 contracts. You can put 10 in here and see how much that would require, and then we could.
So if I bought 10 contracts, that would cost me $7,500.
Yep, and you make $10.
And I make $10.
And this is without the appreciation. This is guaranteed today. You're collecting rent from your tenants, aka your assets.
But you have to have cash. You can't do this with leverage.
You have to have cash.
Not in any reasonable way. Not in any. Your video just went out, sir.
I know. I got to restart.
Okay, it's okay. You're good at Robinhood. I'm good at cameras. Okay. Now let me ask you one more question before I move forward. This number's changing. Do I think about this number? Do I care about this number?
Well, you care about this number when you are doing your analysis, not when you're actually executing the option.
Okay. Okay. I don't want to get distracted and be like, oh, it's going up. Should I wait for it to come back down a little bit? Does it matter? No.
It doesn't. It doesn't matter. That's a great question, though. It doesn't matter because, well, it matters at time of when you're doing your analysis, not like in the few seconds that you're going to do the contract. Yeah.
Okay. And then also, we're taking much longer than you would normally take.
Exactly.
Does this matter
would be
over
like
here?
5 minutes.
Does this matter over here? This
yes. So this is going to be your bid and ask price. So you can execute at market. You will get what's called slips sometimes, like where your entry may be a little off. But my bid that I have here is 7 cents. So all you got to do is slide that over to bid. And then you're going to put in that limit price 7 cents. So you're telling Robinhood, I will do this contract, but at 7 cents per share, and or 7 cents per option contract, and that's what you're gonna buy it for or sell it for.
Okay. Well, now it says my profit is $7.
Oh yeah, I'm so sorry. It's because I didn't put the limit price in there. Yeah, now you got the actual accurate number. So 7 divided, that's a lot higher return, isn't it? So 7 divided by 780 times 1, that's 0.89%. So you're going to make 0.89%.
I'll take this all day long. I'll do this every day. Instantly. Yeah. Okay, we'll talk about that next.
So now you're going to do you want me to explain that little histograph, or do you want to go ahead and do the order? I don't want to take too long.
You know what I want to do is I want to come back next week and talk about it again, and we can go in deeper. I don't want to do everything all today. So I'd rather I make this a series. How's that?
Yeah, let's do it. So you'll just, after you got your bid, your contract, and you analyze, you're okay with the risk and all that stuff. Now you're going to click review order. Oh, and one more thing. As you're executing this trade, go down to 750 strike price.
Yeah.
So, Alex, if I were to tell you that you could make 0.89% on your money and you have a 92% chance of being profitable, would you turn that down?
You said 8% or 0.8%?
92% chance of making 0.8%.
A day? Yeah, I would take that.
In a day for a week. So technically this would be in a week. So look at that chance of profit right there. Robinhood even gives you, because it's beginner friendly. You see it? Chance of profit.
Yeah.
There you go.
Okay.
So now you click review order.
That makes it seem like gambling.
No. So all that's doing, we can again go over that in a later video. I'll explain what that chance of profit means.
Yeah, you're agreeing to buy 100 shares of SoFi at $7.50 on or before January 12th. If you are asked to buy SoFi by then, you'll keep your collateral and keep the.
You select January 12th. I'm sorry. You got to click expiring. You got to do next week. So what's next week?
It doesn't say that. It just says good for day or good till canceled.
Yeah, click beside the put tab. There's expire. I'm sorry, right there. Yep.
Okay.
You're going to do January 19th.
19th.
Yes, this is going to be a week-long contract.
And then this will say good for canceled, good till canceled.
Good for day, because you want this just to sit for today, and you want to get filled today. You're going to make the same return.
My chance of profit went down considerably.
Yeah, because it's a week long.
Right.
It's a week out.
Yeah, you play the game longer.
Mm-hmm. Yep.
Yeah, they can't predict the market. Okay, review.
Yep, review.
All right, you're agreeing to buy 100 shares of SoFi at $7.50 on or before January 12th. If you aren't asked to buy SoFi by then, you keep your collateral and the full $7 credit. You're also paying regulatory fees of 0.3 cents per contract, or excuse me, 3 cents per contract. Submit.
Yep. And that's a great explanation, honestly, of exactly what's happening. You're getting a bit of cash flow.
Yeah, you're buying
nothing.
I am buying the stock with cash, and then I'm giving somebody else the option to buy it at a higher dollar amount, or excuse me, a lower dollar amount between now and then. So if the stock starts,
you're getting it confused. So you're selling the right to own that share at a lower price, but you're not actually buying the share right now. You're not owning SoFi right now. You just own the contract.
Okay.
You just like wholesaling, right? In wholesaling, you don't own the property. You own the contract to assign it to somebody else. And that contract is valuable. You take, say, 10 grand or whatever. You're doing the same thing here. You own the contract to say, hey, somebody can buy SoFi at $7.50. If the strike price hits that, I gotta eat it. But so that's a little different, I guess, than wholesaling. But the contract is true where you're gonna get a premium, just like how in wholesaling, and then you would give that to somebody else, or
so
you just price doesn't get there. And
we want the stock to go up.
We want the stock to go up to collect cash flow, but if the stock goes down and hits our strike price, because I, Austin Clark, not Alex, has made peace with owning 100 shares of SoFi, I'm okay if I am incorrect on my analysis and own it.
What I'm saying is, if the stock goes up, then that $7.50 price starts to become more appealing, and somebody will buy it, and I sell the option. Is that correct?
No. So because you're not interacting with anybody, you're interacting with Robinhood, the brokerage, as in you're selling the rights to own this contract, and if it goes down there, you've got to own it. But if the price just keeps on pumping, nobody owns it. The contract is void. You collect you've already collected your $7. You literally just got $7 into your account, and you walk away.
Gotcha. Okay.
You can even go to your notifications, and it'll show you.
Yeah. Do they collect the cash now?
Yeah. It hits your account, so you should have gotten an alert somewhere saying, "Oh, your option probably didn't execute yet because you did a limit." If you scroll down, it'll show you pending order right there. No, it's because you have a limit price of 7 cents. So right there on the top right, where it says pending order SoFi. So right now, your limit price your bid is 07, so you just haven't been filled. Does that make sense?
No, and this is something that for the singular person who watches this is why it's so important to go slow, because it's like driving a car. I can tell you how to do it, but man,
Mhm.
it's not going to feel very comfortable or confident the first time. It's like doing deadlifts, right? I can tell
Yeah.
you exactly how to do deadlifts, but it is not. They say it's like riding a bike. That phrase. It's like riding a bike. You can't teach somebody how to ride a bike. They have to do it by muscle memory. And so
Hmm.
with stocks and these things, there's a mental muscle memory that comes along with it. There's an understanding of like, oh, once I learn this, I know it more intuitively. So right now it
Yep.
all is very, I know investing and I know theory and I've invested for many times, but this is not theory. This is like tactical, and it's going to take a little bit of time. This is why it's so important. I'll tell you a quick story. My first stock, I never invested before. I never had any money, and I was like, I don't know how to do stocks. So I bought $1,000 of SPY
Hmm.
because I was like, you know what? I'll just buy something easy, low risk, and we'll just see how it goes. And that stock now I ended up buying tons, and it's probably worth, I don't know.
You actually probably did what you were probably like a unicorn in the first stock story, because most people's first stocks are very bad purchases. So you actually did the best way.
But this is my point, because what happened is the stock went up, and what it did was it
Hmm.
gave me confidence to go buy, to spend more time learning and understanding. And this is why when you ask me, do you want to go risky? And I'm like, no, I want to play again next week.
Exactly. Yep.
Next week we can do this again. I do have a question for you.
Yep.
If I make $7 a day
Well, this will be in a
on,
week, not a day, but yeah.
well, could I do this every day?
I mean, you could, but they would be week out. So like
Right?
you can in theory, but it's not efficient to do week-long options every day. The rule of thumb is you want to do your cash secured puts on either Thursdays or Fridays, like the end of the week, because that's when the stocks take a little bit of a dip, and that's also Friday is when the options expire every Friday. They're
Always? Oh,
always
because of the end of
Friday.
the stock week.
Yep, exactly. So
Okay.
you kind of want to do it Thursday and Friday. In theory, you could, but it's not efficient to do it every day.
Dude, that is valuable information right there.
Because see, look, you can even see minimize that until you get filled, which I'm actually unsure, Alex, why it's saying bid is 0 and ask is 1. This is what it should look like. If you can see my
I can't.
screen, it should be showing 8 cents and 9 cents. I don't know why it's doing like you should be filled by now. I don't know why it's saying 1 cent. That's weird.
Bid is
Yeah, it's
0,
nothing.
ask is 1.
Yeah, that's not. I have no idea why. Because the bid and ask is the trade volume. Like people are bidding to buy and asking to sell. So it even says 0 there. Like it shouldn't be. It should be showing orders on both sides of the order book.
Could we have messed it up? Could I have put something in wrong?
We can retry this. This is great for troubleshooting if anybody runs into this.
So I'm going to
So
sell,
you're
put,
gonna do a sell
I'm
put.
going to go
Well,
750.
what you want to do then, if you want to redo this, just cancel your limit order, and we can just do it again. So because it won't mess up anything. You never lost your money or anything.
Canceled.
Yep.
Okay, let's try it again.
So
SoFi.
SoFi. So
Trade
real
SF.
quick, you can even see right there the price of SoFi is taking a dip right now, right? It's Friday. Everybody's selling off, taking profits going on the weekend.
Weird. Okay. I want to trade SoFi options. I want to sell a put.
Hmm.
I want to go in at
You
750
want it to expire on January
a week from
19th.
now. Yep. I want to get the 750 number here. I want to buy one contract. Is that correct?
One contract. Yep.
My limit price, I want to be 7 cents.
Now here's a little tip. If you delete 7 cents real quick in the text field, if you guys are even unsure of what the bid ask you want to do or what the bidding price you want to do, just delete that, Alex. It's like just clear it out. It'll
Okay,
have
I'm
a
trying.
little maybe just click. There you go. Oh, okay. Well, it didn't reset, but there. You see how there's like a little gray area under the ask and bid. So there's a little gray number in that text field once you first get to this page, and it'll have the suggested fill price. So like right now, you came back to it and it said 0.08, meaning 8 cents instead of 7. So you could try, since the bid is 8 cents, you could try 8 instead of 7 in that text field, and maybe so you even have a high likelihood field. So maybe this will be pretty instant. So now click good for day, review order. There you go. So now you're getting $8 instead of 7. Which is, you just now surpassed 1%. There you go. You're in. Now, first important note, if anybody tries this for the first time, you will be down instantly because the money has to fluctuate and it goes down, and you do what's called, there's a little bit of like slippage, because it's just like how everybody in the market is buying and selling at the same time. So in that buying and selling volume, you're never going to get the exact entry. It'll be what's called slip. You're going to get a little slippage. So you're going to be down instantly. So don't freak out when you see like minus 50% or 60%. It's normal.
Dude, this is fun.
And now you can go to notifications since you instantly got filled. And now you can see the $8 to be credited to your account right there. Boom. SoFi. Good news. You got $7.50 with a price of 8 per contract. There you
go. Okay. How do I know? How do I stay on top of this? This will.
So there's 2 ways.
Up here.
Yeah, 2 ways. You can just view your. If you have just an option. No, go back to your home screen. If you have an options only Robinhood account, you can just simply use the equity line. But where you, like you and probably many others, are doing other things, you can scroll down. And now again, I'm speaking from the phone perspective. There should be an options button, and it'll show you your actual total cumulative return from options. Or maybe click on the options name on the top right. What's those 3 dots?
That's just your equity today's
well,
return.
you can monitor it that way too, Alex. So if you go back and click that, you can click no, not that. Back to the home screen.
I hear you, but I'm not. But also, you don't control me.
Okay. All right.
Okay, what were you gonna
say? Click those 3 dots that you just did on the top right of options. Now you can see, if you just want to glance at it, your total return. Yep, right there.
I don't want to show you total return because you're gonna see how much money I lost on everything else.
No, that's just for options. That'll just show you. Well,
okay.
Yeah, that'll just show you your options. Yeah. So right now you're just down 12.5% because of that slippage. But now you got to give this a week. And what I like to do, again, this is what I'm doing. So you can go set your notifications under your account to be alerted when you're 75% profit. I don't know if you want to show your account side right now, but because I don't know what it's going to show if you just instantly click on it.
I don't know either. Let's find out.
All right, cool.
Yep. Nope.
Dude, Alex just doesn't care. All right.
I don't care. Let's stop sharing real quick. Okay.
All right. Tell me when you're ready.
It's just my personal address, phone number, and email address. It's fine.
Yeah, no worries. It's good.
Okay. All right. What am I doing?
So when you click on that, God, crack me up, bro. Click on settings.
Yep.
And go to notifications.
I don't see notifications.
Notifications and messages, maybe. It may be different on phone. I have literally never once logged in to Robinhood on the. You are such an old person.
I will fucking kill you.
Literally, they made Robinhood for mobile investing, and he uses his computer, guys.
We're gonna find out who's old, sir. We're gonna find out who's old. I'm gonna get my walking chair and I'm gonna get over there.
That's if you can pick it up.
I don't see anything about notifications.
You don't have it.
It must be on the phone. I'll do it on the phone. I'll do it on the phone. I have it on the phone.
Okay. Well, this is better anyways because you want to be notified when this hits. And make sure to take a screenshot if it happens. That way you can then put this in the video.
No, I'm just gonna post this as is. I don't give a shit.
No, I mean when you get the alert or a screen recording or whatever. I'm just meaning the actual. You're gonna get a phone alert this week if you.
Push notifications.
Yep. So
Yeah, everything's
settings.
on here. Order status.
So scroll down.
Everything's
Scroll
on.
down to. I know, but there's one.
Options, price movements. Oh.
Yep. Click that, okay. And then set that to.
I have 20, 50, or 100.
Yeah, set it to 50. That's going to tell you when the price moves 50%, and then click that gains and threshold.
Yep.
And set that to 75 gain.
Got it. Cool.
And now you're going to get an alert when you make 75% in appreciation off that contract, and then you could make $8 in premium plus whatever that, however much that appreciates.
Tell me about the appreciation real quick. Now I'm curious.
Yeah, so all that is, it gets more valuable as the price increases, right? Just like how if you were to buy,
because you're farther away from the strike price.
You're farther away from the strike price.
If you can buy that thing at $750 and now we're up to $850, it starts to get real. It starts to be a lot more valuable.
Just like a wholesale contract, right?
So how do you get paid on that?
So you can't really simulate it right now. This may be something we want to come back and show you because you can't. The button won't be there, but you'll have. Let me see if I can show you. Yeah, I can't show you because it's not even here right now because I closed my position. So there's going to be a button on Robinhood that appears. Well, you may be able to right now, Alex. You don't want to do it, but you can buy back the option. That's what it's called. So when you go on your home screen, there's a button when you click on getting your contract back, right? And you click buy back option. And what you're doing is you're buying back your option. So you get your money back, the contract goes void, and now you have all of your capital back plus the $8 premium plus the appreciation of whatever you collect. So go back to, yep, right there. Is there a button that you can click on? View all options. Nope, that's not it. Go back.
Roll this position?
No, you don't want to roll it. Review.
Stop limit order. Sell to open.
Maybe click review order. The big green, yeah.
No, that's just.
That's just buying another one. Oh yeah, you're not even on the. You're just on the generic page.
Yeah,
This is so weird on the computer.
Simulate my returns.
No, well, I mean, you can show that to see how much you could make, but that's not how you buy back the option. There should be a green button. Now on the phone, it's very simple. It's just you click on your option and there's a green button like review order there, and you're buying it back. But
I don't see it on the phone either, so you're a liar. Oh, hang on.
So actually, I can show you right here. So you see how? So I have a Rivian. A Rivian. So you see this buy button right here, trade, and you see that it says buy.
Okay.
So you click buy, and where I have one contract already, it's not going to focus. But where I have one contract already, I'm going to click one, and then I'm going to put the limit price of whatever the bid is, and then now I'm going to get back that my money with the already collecting the premium plus whatever appreciation it is.
Yeah, that's weird. I don't see any of that on my phone either.
Well, it may be because it's just today. Again, I've never. Yeah. I don't do this I don't buy back my contract the same day I sell it. So, yeah, I'm not 100% sure why. Now, but that roll this option, that's a great little thing there. So if you believe, so let's say the price gets close to your strike price, and now on paper you're unrealized down. Just like, again, if the housing market takes a dip and you bought at the top and you're on paper down, you never realize the gain until you sell the house, right? So same thing here. You could be down, but you haven't realized that gain. So what you can do, if you still believe that the option is going to go up in value, maybe it's just taking a temporary a dip, you can roll the contract. And what you're doing when you roll the contract is you are buying it back and then selling it instantaneously. So you don't realize that loss. You're still just floating in unrealized losses. But then here's the cool thing. Just like with property, what happens if the real estate market goes down? You're still collecting tenant cash, right? You're not just suddenly not getting rent. It's the same thing here. You still get rent as as you're still on paper down, and now once the price comes back up, now your return gets dramatically increased because you were dollar cost averaging your position, just like how you would dollar cost average your position if you were just to buy and hold Apple or any other stock.
So how do you do this? You just do this. You do the same thing every week. Maybe you adjust the
Yep.
prices a little bit, and you just
yeah.
you
So
just either collect cash or you collect stocks.
Yeah. So I usually now some SoFi and a few stocks they're pretty consistent. Where about Tuesday to Wednesday, I already have made my 75%. That's my rule. I don't get greedy and let it go to 100 and all that stuff. So once I get to 75%, I just buy back.
So do I have to check in on Thursday and see where I'm at? Oh, you're saying when the notification comes in,
you're
and
going
I'm
to
at
get a
75%,
notification.
you're saying just sell it?
Buy it back. Well, you're not going to sell it because you already sold, but buying it back, yeah. You're gonna cancel the contract and you're gonna get your money back plus a little bit of appreciation because of the contract.
Okay, interesting.
Because you already got the $8. $8 is in your account right now. If you go to your cash holdings, you got $8, and then you're just gonna get your original cash back plus appreciation. Yep.
Okay, but how am I gonna spend it all?
So you see right there, it says options collateral. So we should have probably took a screenshot of your buying power so we could see that. But the only other way to see that is in the trade history. You'll see the options credit plus 8.
Gotcha. Okay. Interesting. Do you like this Coinbase trade down here?
Coinbase? Ooh, dude, that's a good one actually. That's a good one. Yeah.
I'm down so much on that though.
You buy when it's red. It's good. People are scared. You know why it's good though?
I bought a year and a half ago, and it's been nothing but gone down since then.
You FOMO, that's why. No, I'm joking.
No, you know what it was? Actually, you know what it was? Is I ran into something like here. Oh, this doesn't show you mine. Okay, good. My average return is negative 60%.
Nice.
Yeah. My average cost is 337, so I'm way down. No, what happened? I ran into a bunch of money. I sold the property and ran into a bunch of money, and I needed to stick it to a bunch of places, and I had some room to take risk, and so I took some risk.
No, I think I will say now this is already being recorded. I will say that's still, yeah, you bought a little high, but Coinbase, they're sitting on a lot of Bitcoin, and the Bitcoin ETF literally came out 2 days ago. So you can do the math on if the institutions are now playing with Bitcoin in an exchange traded fund, and Coinbase is sitting on one of the largest holdings of Bitcoin.
It's a gamble. I don't want to gamble, but I'm not also. I can afford to take a little. I'm in a position where, if anybody watches this, like, there's some money in here, but this is not. This is not the bulk.
Now I don't like that. The GME down there. I don't know what you're doing.
Oh, guess what? Well, I was fucking with somebody. Again, I bought one share at $90. It's split in 4
shares. Oh, it's split
in 4.
Okay.
Yeah. I'm down on that too. I don't know how.
Because your cost basis is $24.
Yeah, because I bought it like 90 or whatever. I don't know. Me and my buddy were screwing around, and I just bought one to, whatever. Ford, Robinhood, which has also been very bad for me. All of these, every time that I don't do something I know, look at this.
So, Alex, do you want me to show you something? I can share my screen.
Even this piece of shit company. I'm finally.
You're actually up. You're in the green.
Finally up. I'm finally up.
The one that you think is the worst.
Go here. This one is there you go.
Yes, sir. Look at that. Average return. Boom. 8%.
Yeah. I have 3 converted IRA accounts that are like those just sit with they just sit in the ETF. They sit 10%, I think 5 or 10% bonds, and a bunch of Amazon stock that somebody told me I was a lunatic for buying at 800 10 years ago. That is now doing very well.
Mm-hmm.
Something like that. But anyways, yeah, you can share your screen.
Yeah, that's not bad. Only when I don't know what you're doing with GameStop.
It was a meme.
Give me an asset that you actually genuinely would want to probably dollar cost average into or buy into.
Dude, I just buy the ETF. I don't know anything about companies.
Okay, well, okay, it's fine. No, let's say you want to.
I like
No.
I think Ford is going to be a monster. I'm surprised that my Ford stock is down, and maybe not in the short run, but like I think Ford is going to be a monster. But the big ones, I think Apple is going to continue to do very well. I think Facebook Meta is a really good one. I don't know. I don't pay attention to the stock market nearly as much, so I'm not well versed.
So I'm going to teach Alex. I'm not going to teach him how to trade. I'm going to teach him how I trade, and if he wants to learn something, he can. But my goal at the end of this is because I'm not a licensed trader or an educator.
That was liability protection and an insult in one. That's not easy to do. Good job.
Okay, so trading in and of itself, people think that it's this insanely hard thing that you have to be a genius, you have to be the next Warren Buffett. You hear the term all the time. It's impossible to beat the stock market. All this, right? So I'm going to show you. So Alex, if you were in a forest, okay, and you see this giant footprint, it's like an elephant-sized footprint. Are you going to think there is a small animal that was here in the forest around you? Or are you going to consciously know that this is like a large animal, or if you know what an elephant footprint like, there's an elephant somewhere in the area?
Large footprint is large animal. Oh
Okay,
shoot, dude! I gotta freaking split. I gotta end this.
Oh, okay, no worries.
I'm so sorry. I'm actually late for another call.
No worries at all, dude.
I'm so sorry. Yeah, let's meet up again next week and we'll retrack and see how this trade does.
Awesome, let's do it. I had fun.
Sorry.
No, you're good, man. Go ahead. All right, see you later, man. Have a good day.